Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 65, Nasdaq's up 2, S&Ps are up 7.5. Gold contract down $5.90, trading at $1,290 an ounce. Silver up 2 cents at $19.44 an ounce. Platinum down 13 at $1,424 an ounce. Copper up 8 pennies at $3.17 a pound. Light sweet crude. Look at that. She got some juice in her. Up $1.59 at $96.07. Bonds. You have the 10-year down 11 ticks at 125.27. 30-year off 7 at 139.18. King dollar wants to go to the moon. She's up 320 and 48 ticks at 82.28. You got the euro down 58 at 132, and the yen's trading at 103.71. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. Cash S&P right now, we're at 1986.37. The low of the high of the 24th of July is 1985.79. If you want to see something that's just really wild, we'll go over to the SPY. The SPY, folks, okay, is right at the high. It actually tagged it and didn't get a penny over it. Right now, we're at 199.06. It just got over it to 08. We'll see how it's going to handle this price. So the first time that we went up to the 199.06, went up there 10 minutes ago when, since 2 o'clock, we have some nice volatility in this marketplace. That's when the Fed minutes come across. First, the SPY got down to 198.22. Then it tagged the 199.06. It just tagged it again. It got to 108. We'll see whether it can hold that price. I suspect we're not going to. The reason being, more so than just looking at the market, is the XLF can't hold price. The XLF right now is up 8 pennies, and the XLE is, let's see, she's up 20 cents. Both of those indices, those sectors, folks, should be up dramatically in order for this S&P to hold it. You do have information technology, which is actually the largest weighting inside the S&P. We'll see how it's going to handle it. We're particularly going to see how the cash is going to handle this. NASDAQ Composite. We go over to the Composite. We take a look at the volume is going to be light once again. Right now, what we've done volume-wise, we're at 341 million. That says it's going to come in about 550 again. Actually, we did 555 yesterday. The way this is shaking out right now, you could do about 525. The juice at the end of the market is a lot. NASDAQ Composite. What we have with the Composite is over the highs. We're at 4530. The high of yesterday was 4528. Composite also is going to come in once again with lighter volume. Yesterday had 1.554 billion. I suspect we're going to come in with probably 1.4 out here today. So the NASDAQ itself is going to be really weak. The SPY, the SPY, we take a look at the SPY. The SPY thus far has done 53 million shares. The high yesterday you did 59 million. We're doing, we'll see how this basically handles this level. Right now you're at 199.11. What does happen, no doubt, is that the further that it gets away from the 199.06, the more probability that it would take a leg up. We'll see whether it can get away from that number out here on the next hour right here. The three Qs, the NDX 100, we have the NDX 100. That is trading up 17 cents. That's 17 million shares versus 21 million yesterday, versus a swing point out there of about 24 million. So it looks like the three Qs still are not going to do the wide price spread accelerated volume at all. Inside the three Qs, what you have is this. Putting juice into it, you have Mylan Pharmaceutical, that's up $1.70. You have Micron Technologies up 95. SanDisk is up 247, and Garmin International is up $1. Taken away from it, you got Staples down 33 cents, Whole Foods is down 53, you got Adobe down 96, and you got Mattel off 36. Gold contract. Now, we take a look at gold GC. And what this is all about, since at 2 o'clock, folks, the Fed come out with their minutes from the July meeting. Inside those minutes, what it was specifically was that they were talking about that rates may go up sooner rather than later if, in fact, unemployment continues to basically have a good picture, which it is right now. Gold contract, GCZ4, we have a gold out here. The volatility's in gold, but guess what? They can't bang it down. It's a beautiful thing. Gold got down to a price point of $1288.70. We've only done 76,000 contracts. Last Friday, we did 192,000 contracts. You're going into 225,000 contracts, which is pretty amazing. So bottom line, they can't whack gold. And in that context, when you're talking about bonds, check this out. They can't whack bonds. This is just amazing, actually. 10-year bond, guess what? It's down 10 ticks with 1 million contracts. That 1 million contracts, by the way, folks, is coming into 1.8 million contracts. So even the bond market, after even reading the Fed minutes, are basically saying, well, guess what? We hear what you're saying. It's, you know, you're looking at it may move quicker. Bottom line is that I guess it's what is the definition of quicker? 30-year bond is back 4 ticks, 265,000 contracts. That's going into 513,000. Now check this out. This is the trip in itself, and it's the dollar, folks. Dollar index broke out yesterday. Wide price spread, accelerated volume, follow through out here today. 323 ticks. You're at 21,000 contracts. This is a ABC structure in the way up. It's a big one, too. Well, let's put it this way. You're at 82.26. You take this and you put this on a continuous contract. 85 is the number on the dollar. Now, what you're going to see, what we're going to basically learn when it gets up to 85 is that can it break that 85 level? We haven't been able to break the 85 level since 2008. And I'm sorry, no, not the 85, the 89 level. When it gets up to 85, I do expect that's going to break and it's going to go to 89. It's the 89 level. We hit 89 in 2008, gave it all back to 74, got back up there in 2010. And what we have done thus far is this pullback was minimal. It's been building cars out here for almost 2 years, folks. December of 2011 is when King Dollar started building cars for higher price. And inside that, what is amazing is that the gold contract hasn't got killed with, in fact, the dollar going dramatically higher. Inside the futures markets out here today, you have, let's see, so copper's got a nice bid. Copper's up 2.3%. You get oil up 1.6%. Gasoline is up 0.5%. Getting soybeans are down. You got wheat down, and lean hogs are down 2.5%, pretty dramatically. We go back over to the SPY because this close in on the SPY here is going to be really cool today, folks. You know, it's either going to make it or break it. And when you're up at this high again, you know, everyone's the bulls and bears. I suspect in the next 40 minutes. Yeah, we get the next 45 minutes, we're going to have a nice little fight out here. So it's one beautiful thing. Coming up in the next segment, we're going to have our man, Mr. Andy O'Rourke. Andy's from Direction Chairs, folks, and we're going to talk to him about a couple new products that they have out there. One of them happens to be a S&P volatility product. It's pretty neat how they've set this up. If you happen to be a longer-term investor, and do want to stay in the market when, you know, when volatility comes in the market, which you know when it comes in, it's fast and furious. We're going to walk through exactly how this product works. The symbol on that volatility product is VSPY. This is Tom O'Brien. This is TFN. We have the Dow Industrials right now up 64. Nasdaq's up 2. S&Ps are up 7. We have gold contract down 530. Silver is up 4 cents. Bonds, 10-year up 10 ticks. 30-year up 5 ticks. Stay right there, folks. Come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now up 72, Nasdaq's up 4, S&Ps are up 8, and if we go over and we take a look, it looks like Bank of America is going to have a settlement. They are reaching a $17 billion settlement. Bank of America is going to reach a settlement with the federal state authorities over its role in the sale of mortgage-backed securities. Bank of America is going to pay. It's always wild how these babies shake out. It's $10 billion in cash and consumer relief of $7 billion. The consumer relief, anyway, you get the gist of it, folks, is $10 billion. That's it. What you do have out here, this is where it's going to be interesting. Of course, what ended up happening is that Bank of America really was, it's a question whether it's forced into it or bought it. They bought Countrywide. And the CEO of Countrywide, which was Angelo Mozzola, they're saying that he hasn't escaped charges yet, but he definitely has escaped criminal charges because the statute of limitations was up more than 12 months ago. What has happened is that I guess the feds are saying that they're going to go after him on a civil penalty. Until now, the harshest penalty imposed on him, he's 75 years old, has been $67.5 million in accord with the Security and Exchange Commission, resolving allegations that he misled Countrywide investors. He earned $535 million from 1999 to 2000. We'll see how that shakes out. But bottom line, the headlines say $17 billion, but in fact, it's only $10 billion in cash, $7 billion in basically consumer makeup. And consumer makeup, with a good accountant, I'm sure, is a lot less than $7 billion. Maybe just a write-off totally. We'll see coming into this closeout here some of the high-volume stocks in a low-volume market. You have Hertz. Hertz is getting hit out here. If we look at Hertz for HTZ, it looks like Hertz has some financial problems out here. What you have with Hertz, if we bring Hertz back, put this on a monthly basis, what you're going to see is that, let's see, the chart's not that bad looking. It come down with volume November of 2013. So that wants to test the $24 to $19 level. That's where it's shaking out right now. Today, what they're saying is that they have to restate 2014 earnings. That's what they're going to be doing. So a restatement is a problem, period. Apple has got over its high that was generated a few years ago. That high is 100.72, I believe. That was before the 7-for-1 stock split. Yeah, it's 100.72.43. We'll see whether, if in fact it's going to stay. Let's see, that's billion. Let me put this on. So on a monthly basis, September of 08, of 12 rather, September of 12, we did 2.3 billion. You did, oh, look at this. This is a trip. So we did 1 billion last month. So at the end of this month, folks, this is where the test comes in. 100.72 is the number. Thus far, we've done 611 million. So the way this is set up, your benchmark is 2.3 billion. We have all of, what's this, the 20th, you got all of about 10 trading days left, which there's 21 trading days, so that would be 1.2 billion. Yeah, you're never going to do it. You're going to be shot by at least 50% of the volume. So the real key is going to be, will it hold price at 100.72? And what I'm talking about specifically is that at the end of this month, because that's going to be a monthly test on a high, volume and price. The bottom line, volume-wise, it looks like it is absolutely not going to make it. Let's go over to the XLF. Why the XLF? Well, what the XLF is this. You have the financials, right? Bottom line, S&Ps are at highs. The financials are at the top of their range. You're at 2296 right now. And if we go take a look at just some of the large caps inside of that, okay, BAC still won't move even though they just got a settlement. JP Morgan came down with volume. It's up 21 cents right now. Can't get out of its way. BRK, Berkshire Hathaway, let's hit the B. That is the largest weighting right now inside the XLF. And if we take a look at this, we bring this back, you put it on a monthly basis, it is at highs, no juice whatsoever. We'll see whether that can give it up. As we go through the rest of the weighting structure, inside here, Wells Fargo, which has always looked pretty good, bottom line is off its highs. And, we're at $50. 53 was the high out there. BAC, of course, that BAC is building cars to get into a lower price. BAC is at 15.50, already down from 18 bucks. I suspect it's going to try to hit the 14.35 level. So financials, the energy sector having a hard time out here. NDX 100 still at highs out here. The GLD, when we're talking gold, they can't bang it down. The bottom line, GLD, you're back 54 cents right now. 3.6 million shares. That 3.6 million is going into the sign of strength from the 19th of June, which had 24 million shares. You know, the most impressive thing inside the metal market today, and the market in general, is the fact that you have the dollar index up 340 ticks, breaking topside, and gold is not breaking downtown. Let's go over that oil market and take a look at the oil market. Oil market has been having a large rundown. Oh, there's not much here either. So what the oil has done, so we've gone straight down from 106. Yesterday, you hit that low of 94. Today, what we're doing, let me just make sure I get the right contract up here. So crude oil, I do, it's the U contract. So what we have here today, volume-wise, oh man, look at this. This is wild. So yesterday, you break down with 100,000 contracts, and we're up today with 17,000. That's a market that still wants to go lower. The amazing part about the gasoline and the oil's coming down, but the gasoline, this is about the fastest I've seen gasoline come down, that actually has come down at the stations for us, because most of the time what you always see is that when wholesale prices go up, the gasoline companies find their ladder very quickly and the prices go up very quickly. When they've come down in the past, when the wholesale prices come down in the past, and right now the wholesale price of gasoline is $2.71. When that has come down in the past, the pump prices have not come down as fast as we've seen them come down in the last basically 3.5, 4 weeks. It's been pretty dramatic how fast they come down. That's telling me that there is huge discounts in the marketplace out there that the gas stations themselves are getting, and the glut must be absolutely extraordinary. We take a look at some of the Dow stocks out here. Right now you get Marvell up 5 cents. Boeing is up 187. You get Coca-Cola down 5. Let's see. GE is up 32. You have Big Blue. Big Blue is flat. 3M is up 122. You stay right here. This is Tom O'Brien. This is TFNN. We have the Dow right now up 65. Nasdaq's up 2.5. S&Ps are up 7. We're coming back with our man, Mr. Andy O'Rourke from Direction Funds and Direction Investments. You stay right there, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow up 67 right now. Nasdaq's up 3.5. S&Ps are up 5. You get gold down 5. King dollar's up 353. And right now we're bringing our man, Mr. Andy O'Rourke. Andy is from Direction Investments, folks, and of course, I know many of you folks trade the Direction products out there, whether we're talking about the Gold Miners Index, the NUG, the DUST, or the Juniors. They have a couple new products out here, which I would like to talk to Andy about. Andy O'Rourke, welcome to TFNN.
Thanks, Tom. It's great to be here.
Absolutely.
Appreciate it.
So, hey, you know, you have the, inside the gold market, you have the 300% daily vehicles for the gold miners bull and the gold miners bear, and you also have the juniors, okay, which, and, you know, of course, we have a lot of listeners that are in the metals market, and whether they're going into the ARCA index or the juniors, those are very popular. So tell us about, I see that you have a new product, and it's the 300% of the actual COMEX gold futures, right?
Yeah, that's right. Yeah, they've been out for a little while. It started back in April, but again, it's a leverage product, just like many of our others.
Yes.
3 times leverage exposure to the spot price of gold through the futures. So we're definitely like the idea of providing people the option to either get into the equities, gold-related equities,
yes,
or the actual spot price of gold.
And, what you state on your website on a continual basis is that these are daily investment vehicles. So when we look at the GLDL, okay, which would be the long gold 300 times COMEX, I guess that would be, well, I wouldn't expect it, but if someone owns physical gold, let's say they own 10 or 20 or 30 ounces, what seems to happen, Andy, and this is my take on it, in the gold market, is that on Fridays, because, the market is closed, once we close, it's closed until Asia opens on Sunday night, that's when it's the most volatile. So that's a nice product to basically hedge if someone has physical gold and it actually want to get delta neutral.
Yeah, absolutely. I mean, I think there's a couple of ways to look at it. Yeah, I mean, a period of time where if you're looking for a little bit of pop for a real short-term trade, you could take that in one direction using, the products. To be clear, we're offering both the bull side of the trade and the bear side of the trade through the 2 ETFs.
Yes.
But
yes.
Also, like you say, certainly a way to hedge. If you think things are going in a different direction, they're great vehicles for that, for sure.
Now, I want to switch gears on you because, what we have had, 2 or 3 weeks in the last 5 weeks is that the VIX, okay, the volatility index has basically spiked 2 different ways. If we go back to July 16th, the VIX is at 1059. It goes up to 17, comes all the way back down here to 12 today. You have a product that it looks that it's really good for folks that want to stay in the market, but yet want some protection when the volatility gets higher. And I'm looking at the direction S&P 500 volatility response shares and the symbols VSPY. Can you explain exactly how this product works?
Yeah, absolutely. I appreciate it. Actually, Tom, let me just quickly step back for 1 second and just point out, because on the gold, the 3X gold products, I just wanted to quickly announce that we're actually changing the tickers on those for everybody. It'll take place on Monday. So GLDL will change its ticker to BAR, bar. And then on the bear side, GLDS will change over to BARS, so bar short. So I just want to make sure people know if they wait until Monday and start looking for them, they might have a harder time.
So the long one, is the long one BARR or BAR?
Just 3 digits, BAR.
Okay, cool. So the GLDL, folks, is BAR, and the GLDS will be BARS. Yeah, I like how you just put the S's and L's on them, man. There's seriously, because the S&P, it's always the SPXL and the SPXS. Do you know what I mean? It's very easy to understand.
Yeah, we have some fun sometimes trying to come up with good tickers, and as you know, in the ETF space, everybody speaks of them as in terms of their ticker. So we try to use some stuff that's memorable and easy for people to think of when they're thinking about a particular sector they want to get exposure to.
Yeah, like the FAZ.
Right, another one. So yeah, exactly the point. I think a lot of your listeners, from what I hear from the call-ins and so on, they're certainly active traders. They love to use trading vehicles like that, ETFs in general, but certainly the leverage products. I think I definitely hear some calls often. But the other product that you alluded to a minute ago, VSPY, VSPY. I guess the way I look at it is it's another product that you can use. Think of it more as a buy and hold strategy.
Yes.
Because now there is some actual tactical activity going on within the strategy, but it's baked into the fund in this case here. So, one way you can think about it is, instead of having to have the actual trader themselves think about when's the right time to get into the S&P, when's the right time to get out, or should I overweight, underweight, that kind of thing. This is a product that builds a strategy around trying to help you do that. so you can kind of, maybe focus more of your time on some of the other trading vehicles. And to give you just a background on how it works, and basically it's a product that looks at volatility in the S&P 500.
Right. When
volatility ratchets up, it will automatically reallocate the holdings and back away from fully allocated to the S&P 500.
Yes.
And when volatility drops lower, it's going to be fully invested in the S&P 500. So think of it as investment into the S&P 500 with a little bit of a downside protection, kind of an airbag for your ride.
You know what's so cool is that I was bringing up a couple days ago with one of the traders at Thinkorswim. One of the large funds had put on, and this came across the Bloomberg because they had to file it evidently, okay? They put on a $1 billion trade using put options for their, these were put options, but it was actually to protect their own portfolio. It wasn't basically,
right.
It was protected. So it's really cool when I saw this product that there's plenty of people that want to stay in the market, want to stay in the large caps, want to stay in the S&Ps. And it seems that the way the product works is that if when the volatility comes in, that the allocation will go into bonds, or a certain percentage that will go into bonds, right, to basically protect.
That's right. Yep.
Right?
Yep. Yeah, exactly. And and I think I would even put forth it maybe even a simpler way, because you're buying one QSIP and not having to focus too much and watch real closely your different options contracts.
Yes.
So kind of democratizing access to this type of a strategy here. It's certainly ideas that institutional investors have used for years, but we're kind of baking that into an ETF and making it available. And really the premise behind it, Tom, is just when we see volatility spike, it's typically, historically, has been a precursor to a downward market. Whether it's a short-term tactical shift or
sure.
whether maybe a longer one. So the idea is, as we see that, the portfolio is designed to adjust.
And what's really cool is that the person that owns the V-SPY doesn't have to adjust, because you're doing the work
right.
inside it. You know what's wild, Andy? Isn't it wild that the definition of volatility inside the market is that it's going down? I mean, it's like I've always wondered, like, how does that work? Because it's never, if the market goes up 500 points, they don't say it's volatile. They say the market went up. But the fact of the matter is, we know that when volatility comes in the marketplace, most of the time it's always on the downspin.
Yeah, it's a precursor, like I said. I think if you look at it, and we have in some of our materials, we look at it that way. We show periods of the highest spikes in volatility and what happened in the market right there afterwards.
Sure.
And it tells that same story. So, that was, when we're building products here, we don't just sort of build them from the standpoint of, hey, what's the coolest product, and, just what do we think maybe there might be general requests for. We think about what are people looking to achieve. In this case here, we're just looking for a smoother ride.
Yes.
And so we build products kind of with the outcome in mind.
Right.
And then hopefully when people look at them and they see that, yeah, it's actually what I'm more interested in is a smooth ride than I am trying to, just always expect that equities are going to run forever, which, they certainly have been for a while here, as we've seen, Tom.
There's no doubt. So we have a question from one of the listeners, right? So the question was, so the V-SPY goes up when the S&P would go up. Would that be correct?
V-SPY will be V-SPY looks at the volatility. So as volatility rises,
yes,
it will decrease its allocation to the S&P 500 and put the difference into T-bills.
That's right. And would you mind staying with us for another segment?
Sure, yeah, no
awesome.
problem.
That's great. You stay right there. And folks, you can give us a call with any of your questions. 877-927-6648. Andy and I are coming right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. The Dow's up 66, Nasdaq's up 3.5, S&P's up 7.5. Our guest today is Andy O'Rourke from Direction Shares, and we're talking about the VSPY, VSPY. It's the Direction S&P 500 Volatility Response Shares. Andy, this seems to be a great product for long-term investors, and in particular, folks, whether they're, have an IRA, a 401k, because in the aspect of longer-term investors, most times they don't want to be out of the market, period.
Yeah, exactly. Thanks, Tom. I mean, the idea is if you talk to people, I mean, what percentage of the investing public out there has some level of exposure to the S&P 500?
Right.
So many, almost
everyone,
all, in some capacity. So the idea is, here it might not be, maybe you're just looking for some sort of downside protection. So maybe you could use this and think of it as a smarter way to get exposure to the S&P 500. Maybe you pair it up with SPY and just know that you have some portion of your exposure to the large caps set with a little bit of a downside protection feature to it. So it's just the idea is so many people have that exposure. Do you have everything in place? Even though we continue to see the S&P rise and rise, there's going to be a point at which it does take a turn in the other direction.
No doubt. And, I would say most of my listeners, all the Tigers and Tigresses out there, no doubt are used to the 300% products, which are daily investment vehicles. So I just want to get this clear, because this vehicle here is a long-term vehicle. It's not a daily investment vehicle, correct?
Yeah, that's right. I mean, there's exactly the idea is that you can put this into your portfolio. It does have a tactical aspect to it, as I mentioned earlier, because it's making that adjustment.
Right.
But it's making that adjustment so that you can hold it for an extended period of time. So, yeah, while people definitely know Direction probably most for our short-term trading vehicles, with the leveraged, 3 times leveraged products, we do certainly build other products as well, and this is just one example of them.
Right. Now, I want to switch gears on you for a second, okay? Because I do want to go back to, and folks, as you're over at TFNN, you're going to see the Direction banner on the top and on the side. You can hit that banner, because we're going to get into some education right now. Because when you're at TFNN, if you go into ETFs, okay, Direction's been kind enough that we took what they have there for the 300% daily products. And on a continual basis, folks, we want you to read that and understand that, because they're great products when you understand how they work. So I'd like to talk to you about the education that you have at Direction, and how you push out that their 300% product is a daily investment vehicle.
Yeah, that's right. I mean, first of all, it's about suitability. I think it's, make sure that you're the type of investor that's well suited for these type of vehicles.
Yes.
And it's not so much what your title is, or how many years of investing necessarily that you've got under your belt. It's more about first of all, do you understand the products, how they work, the fact that they reset every day to get to that 3-to-1 ratio, and the fact that they are not expected to provide 3 times the cumulative return of their benchmark over an extended period of time. They seek a daily goal.
Right.
Doesn't mean you can't hold them for longer than a day. You can, but you need to watch them and understand what your level of exposure is at all times.
What's so cool was I think there's a lot of traders that love your products. What I really love is that once I got to really understand that they compound on the way up and they get defensive on the way down. And, when you're reading that, folks, you got to clear your mind. But it's really cool once you really get that in your head. Because it's like, in the 5th grade when they taught you, a penny a day compounded, what happens to it? Do you know what I mean?
Yeah. And in fact, there's some level of a myth out there that all the compounding that occurs with the funds is bad or negative. It's not necessarily true. The rule of thumb is when markets are trending, so
yes.
you have either a smooth ride upward or a smooth ride downward.
Right.
Your returns will be generally better than 3 times the cumulative return of the benchmark. However, and where you see more people talk about it is when the periods of volatility for the particular benchmark, then you'll see that the returns can decay over time, because if you think about it, if you have a large up day, you're increasing your exposure.
Yes.
Exponentially, and then if you follow that with a down day, sharp down day after that, you have more sort of more punch that you add to that down day the following day, and you basically create a pattern where you're getting whipsawed around a little bit.
No doubt. And it's really cool. And most of the folks that listen know I'm all about price and volume. And when I figured out that the compound is awesome on the upside, but I love the defensive. Once I figured out the defensive posture on the downside, I'm saying to myself, oh, this gets interesting, because of the fact the same way, if in fact something has been going down on a continual basis and it's getting to a smaller number, well, it seems, this is my take on it, that my risk is a little bit smaller at that point. Inside that trade. That's what it really, if I'm going to be right on the aspect of it anyway. But it's really cool once you really do understand the daily number one and that compounding and particularly the defensive aspect of it, So it's really cool.
That's right. Yeah, and I mean, and it's based on the fact that it, by objective, by requirement, they have to reset every day so that the total exposure is equal to 3 times, in the case of the 3X funds,
yes,
the value of the net assets. So the idea is if you have a bull fund and we're talking about a downward trending market or any downward move,
sure,
every time it goes down, it has to reset. So it will take some, so to speak, money off the table each day, because it just has to, if you look at the math, and we have plenty of materials that look at that and show examples of trending up, trending down, as well as volatile markets. It does exactly what you say. When there's a downward movement, it is required to take some of the money off the table, but in effect, what it's doing is actually getting a little defensive at that period in time.
Right. And folks, as you're over at TFNN, you're going to see the banner, direction banner on the top and the side. Hit that banner, and when you come over to direction, the first place I'd love you to go, folks, is go right to the education tab. Go to that education tab. What you're going to see right there, if you happen to be in the metals market, gold's going to be right up there for you. The leveraged and inverse ETF guide. Please download it and read it. It's an awesome guide. You'll really get to understand the product, number one, but because there's so many leveraged products out there, you'll really get to understand how these are put together and what they're all about. Andy O'Rourke, thank you so much. We really appreciate the great education, and you have a great day, safe day, and we look forward to speaking to you again.
All right, thanks, Tom. I appreciate the time.
Okay, have a great one. Have a safe one. You stay right there, folks. We're going to come right back. The Dow is up 59. NASDAQ is flat. S&P's couldn't hold that high out there. We're at 6.5 right now, folks. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes here. This is by Albert Einstein. It is better to believe than to disbelieve. In so doing, you bring everything to the realm of possibility. It's a fact, folks. Everything you need to know is inside you. It's right in front of our nose, too. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 59, NASDAQ flat, S&P's up 6. Gold contract down 450, trading at 1,292 an ounce. Now, if you're over to the gold market, what you have is this. This is amazing, too, because King Dollar broke topside, folks, in an amazing way. Broke out yesterday, but had big follow-through today. Gold They can't break it down. And that's really positive because the fact of the matter is that gold is priced in dollars. When dollar goes up, gold likes to go down. What do we have happening right now? I suspect what's happening is that gold is acting as a currency. You know, it can go right back to a commodity. We know that. But bottom line right now, it's acting as a currency. And I can see why across the world. Gold today, 79,000 contracts. Well, last Friday, we did 192,000. That's going into 222,000. They can't break it down. If you want to see the correlation inside the GLD, it's pretty neat. GLD, 4.3 million versus the last Friday of 13 million. But guess what? It's going into 24 million. So it's 4.3 versus 24 million. There's no sellers. That's what that shakes out as. Bonds. You go to the bond market. This is really interesting. Why? Because the Fed minutes came out at 2 o'clock. Inside those Fed minutes, it's not like they said they're going to go up on interest rates. What they did say specifically, though, is that the rate of change in the employment picture, meaning job gains, may bring a faster increase in rates. And guess what? The bond market didn't believe it. Bonds, the 10-year pullback, 10 ticks, a million contracts. A million contracts, folks, I believe is going into 1.8 million. Let me just see this. Yeah, 1.8 million. So that's not even close. The bond market's not believing it. That's the 10-year. The 30-year, you go take a look at the 30-year, what we have with the 30-year, that pulled back all of 2 ticks, 276,000 contracts. That was going into 500,000 contracts. So you're talking about big numbers. You're talking about bonds want higher price, lower yield. King dollar is off to the races. Wide price spread, accelerated volume. You got an ABC structure on the way up. If you do want to see what ABC structures look like after building some cars, this is a very strong one. Your first leg up started on July 1st. The dollar index was 79.70. It goes straight up to 81.61. It moves sideways for 3 weeks, doesn't retrace at all, takes off again. We have 2 wide price spread days out here right now. You're at 82.30. I suspect what we're going to see here, this run's going to bring you to 85. And how we get to what we do at 85 is really crucial, folks, because what we have, I'll put a continuous contract up here now. The last time that we were up at 85 was July of last year. And we basically spiked it and gave it up. It had stayed up there for 4 months. Prior to that, you had stayed up there for 3 months in May of 2012. So how we hit that, will we overtake it? We'll find out. If we overtake it, 89 is going to be the game. And we haven't been up at 89 on the dollar index since June of 2010. And as I said many times, when we take a look at the bond market, simultaneously what you want to wrap your head around is that we have bonds that are going up, our U.S. bonds, that is. We have the dollar going up. And what does that do? What that does, folks, which is just absolutely amazing, is put huge amounts of firepower into the dollar and into bonds simultaneously. In fact, I heard, listen to this. This is pretty sick. I heard a guy pushing stocks this morning. It was his name was O'Shaughnessy, actually. He runs a huge amount of money, too. He's on CNBC this morning. And he brought up this aspect that if you put your money in bonds in 2008, you'd be down 10%. Well, guess what? He must have picked out the one day that bonds were down, because bonds have been in the biggest bull market since 1981, folks, okay? So be careful of what you hear when someone says factually. He was saying factually, that's what it was. And it's like, oh, really? Okay, I wish I was on at that particular point, because let me tell you something. The structure inside the dollar with bonds, bottom line, they've been in a bull that's pretty extraordinary. Euro, just the opposite. We take a look at the euro. What you have with the euro, it's a breakdown. 2 days in a row. Right now, you're at 132. That's been down from 137 in the last 3 weeks. What you have with the euro right now is this. Next stop on the euro is 127. It's a long way down. You break the 127, which looks to me like we're going to. Why? Because the counter trend bounce that we had in the euro is just like the dollar wouldn't pull back. Well, guess what? The euro, that's not bad. Yeah, euro did do, let's see. Yeah, euro did a 0.618, so that's not bad. So So we'll see how the euro basically goes after the 120. If you break the 120 mark, that's going to basically get some real destruction going inside the euro. And what does that do? Now, the dollar, we'll see if, in fact, the dollar basically hammers the large caps, okay? Because the large caps, folks, international large caps, when they're doing business in different countries, that's when the currency play is an extraordinary play, and it really can put some damage on large caps. Volume-wise out here, not even close. What we did is this. NYSE did 542 million shares versus 555 yesterday. We should be banging out about 700 million, 800 million. On the NASDAQ, that NASDAQ couldn't handle it either. The NASDAQ did 1.492 billion shares. The NASDAQ should be hitting up about 1.8, 1.9. Inside the SPY did not hold the tie. The SPY out here, the high that it tested out here was the 199.06. You closed at 198.92. The three Qs, the NDX 100. This is what the NDX 100 did. The NDX 100 closed at, oh, this is interesting. It closed flat. That's pretty wild. The high of yesterday was 98.76. You're at 98.70 right now. We'll see whether that baby wants to give it up. What you did have is that Apple tested its high, and oh, this is interesting too. So check this out. So Apple tested its high right. Let's see if she. So the high was 100.72, and we're going to be able to do this on the weekly. So watch this. We don't have to wait the end of the month. You can do the monthly too, but the weekly test on Apple was 100.72. Your weekly volume is 500 million. We tested that today. It didn't hold price, and right now we're at 168 million. So guess what? On Apple, this is going to be a classic too, folks. Friday, that means that Apple, number one, has to hold price at 100.72. But what Apple also needs in order to be a valid break topside, it needs 232 million shares right now in 2 days. And it's done 168 million shares in 3 days. So the odds of that are nil. Not nil, nothing's nil in the aspect of math. So it's going to come down into price. Friday afternoon, 100.72. That's the number, folks. It looks to me, at this particular case, the weekly won't hold. We go into the monthly, and the monthly, you're going to need so much volume. It's amazing. So the monthly looks like it's going to be 100 million shot. We did 230 million. Oh, no, 230 million. No, 2.3 billion. 2.3 billion. And last month we did 1 billion. Right now we've only done 620 million. And specifically, we're at the 20th. Let me get this calendar quickly. Come on, there she is. She's right there. And we have, yeah, you get 7 more trading days. And you have 21 trading days in the month. And that's the average, folks. So you get 7 more trading days in order to do, oh my God, that's pretty sick. There's no way. There's no way. Apple's going south. This is Tom O'Brien. This is TFNN. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. We're coming right back. Dow finished up 59. NASDAQ down 1. S&P's up 5.5. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we had the Dow Industrials finish up 59, Nasdaq down 1, S&P's up 6.5. And as we do each and every Wednesday at 20 past the second hour, we get our man, Mr. John Logan. And don't forget, folks, John kicks us off at TFNN every trading day. 8 o'clock in the morning, you want to know what's going on in the whole globe. Well, guess what? Turn into TFNN. You can get all the programming right on your cell phone, TFNN.mobi. 8 in the morning to 6 in the evening. Now, as you come over to TFNN, each and every morning, John puts a video up right on the right-hand side. And what he's using there, he's using the TAS market profiles in order to walk you through the markets. It's an outstanding program, number one. Whether you're looking at the video, but you can look at more than just one video now, folks, okay? He has a whole hour that's up each and every day, no matter where you are. Bottom line is that you can reach him, give him a call, look at the videos. John Logan, what's going on?
Tom, it's good to be here again. How are you?
I'm doing great, man. Well, you know, this morning you had the currencies, and, man, the currencies are rocking. Oh, my God.
My goodness, you are correct about that. We did our free video yesterday on the currencies, and we decided to go back in today and do it on the currencies again because some of the action that we're seeing on it is really, it's not like shooting fish in a barrel, but you really have a lot of leverage on some of these currencies going one way or the other right now using some of these inflection points that we talk about on a day-to-day basis, as you know. Japanese yen, God, it's been my favorite trade for a while, and it's finally developing. 101.33 was that unfair low on our weekly.
Yeah.
And we stayed around there. We stayed around there.
Look at that move. Oh, my God.
Yeah, we talked about some targets actually on this for this move up at 103.68. They're actually being met right now.
Right.
And ultimate targets on the upside could possibly be as high as 105.44. So that been waiting a long time for this move. You know, I've been talking about I love boring trades, and this one's been like right in the wheelhouse when it comes to that.
Yeah, there's no doubt. And, you know, folks, if you trade, this is what's so cool. We're going to combine a couple deals here, but if you are trading currencies, if you haven't test drove the Nadex product yet, get over there and test drive it, because you'll see something that's incredible. Now, you can hit the banner, bring the account up for nothing. They'll put $25,000 in funny money. If you want to see how these trade, let me tell you something. Now, the yen at 84 ticks, folks. 84 ticks is a fortune. Well, it's a fortune, period, okay? What the difference is with the Nadex product is that your trade is just stopped, so you don't have to get out of it, okay, which is, you know, pretty amazing. And, of course, the euro this afternoon after those Fed minutes, John, that just tanked, and King Dollar is ruling, man.
Yeah, you know, I'm glad you brought that up, because we've been looking at the euro as a short for a while now, for a couple of weeks, and the reason being is because when we started crossing and closing below that 135.52 area, and then we actually went back and retested it the following week, and that's one of the most powerful things you can have with our setups is breaking support or going above resistance,
nice.
coming back and retesting that area, and then in this instance, it's been okay to be short, not okay to be long, based on that fact alone. I mean, this has been like just hang on and, you know, maybe pick some new battles a little bit lower. I actually tried to put some more weight on this myself around 133.78. Got a little noise around that area, but then, you know, you got to get in there and turn the wrench the same way every day you go to work and get into the short again. And finally, it's just, man, is it developing now? Jeez.
There's no doubt.
I mean, yeah, it's been you know, currency traders in the past week or so. Not to mention some of the moves we've already had in the past month.
Sure.
In the last week, you've made your entire semester, if you will. You know what I mean?
Yeah. Right.
I mean, these are the, you know, if you're a currency trader, this, like, you know, this is currency heaven right now.
This is what you wait for, folks. You
exactly.
know, because what happens per tick in the currency, you know, is very large. Number one, because the leverage is there, and the volatility is there. Excuse me, folks.
There has not been any situation, and when currencies trend, and they define themselves as like, okay, you know what, we're below support in this case with the euro and the British pound. The British pound's even been an easier trade, in fact. But when we start breaking those support areas and we start getting into a new turn or trend, so to speak, and that thing is getting developed and identified, man, these things move. I mean, and now that we're out of that kind of herky-jerky, you know, what's Yellen going to say and how's that going to fix this and blah, 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 blah. These things have actually defined what the tone is going to be now moving forward. And I think some of the things that you talk about fundamentally every day about what's going on in Europe and, you know, the kind of the baton being passed, so to speak, away from Europe right now. Again, pick the technicals, listen to you on the fundamentals, and boom, it's been magic lately.
Well, you know what is interesting? There's no doubt, and it's like, it seems like it's common sense. But we both know in the market there's no such thing, right? No, I know. There's no doubt. You know what I mean? But when it does finally break, which it has, meaning King Dollar's gone up, and you'll still hear, you know, folks out there saying that, you know, there's something wrong with the dollar. It's like, what are you, crazy? So what are you going to go into, folks? Okay, you're going to go into the euro? You're going to go into the peso? Or really?
But you know what? Trying to outthink these things You know where that ends. You know where that.
Listen, man, that's why your software's so cool. No, there's no doubt.
I mean, try to outthink the market and try to make a living outthinking the market instead of just going with what's presented to you.
Right.
You'll be fine going with what's presented to you instead of trying to be the smartest guy in the world that outthinks what the market should be doing.
There's no doubt. Let me ask you: Are you in Chicago?
I'm in Chicago. I'm in the Trump Hotel. We're doing an event here on Friday.
Yeah.
And looking forward to it. Going to have a good time. I'm sitting, looking down the Chicago River right now, down into Lake Michigan. We were trying to get this on camera earlier, Al and I, on set, but there was so much backlight coming from the window, we couldn't actually get it hooked up. But man, what a beautiful scene! What an awesome city! Too.
Isn't it a beautiful city, man? I love Chicago. I mean, it's a walkable city, and it's a huge city, folks, but it's walkable. You know,
friendly folks, and best food you'll have in the United States.
Oh, you know what you got to do? You got to go to the La Colonial. The La Colonial, right? It's a beautiful place. It's in a little white building. It's up on Rush Street. One of those cross streets there. Unbelievable Vietnamese food. It is unbelievable, man.
I used to live here, Tom, and that was an area that I loved frequenting. That area.
Yeah. I every time I'm there, I go there. I can't. I mean, it's like, oh my God, the food is so good. It's amazing.
Yeah, Morton Steakhouse, Gibson's, the whole. I mean, you could just.
Yeah.
Best meat in the world is here.
There's no doubt. And the Cubs playing? Are they in town?
Yeah, we're actually taking people to a Cubs game on Saturday after the event on Friday.
That's awesome, man.
Yeah, Cubs tickets are kind of easy to get right now. but going into that stadium, I mean, that's like the National League version of Fenway Park. You know?
Oh yeah, there's no doubt. There's absolutely no doubt. Yeah. Well, listen, man, we appreciate you growling and prowling with us out here every morning, and I'm sure that the workshop's going to be absolutely incredible. Because I know you've been building out this piece of software in an incredible way, and you have quite a team there when you're building this baby out, man.
Well, we'll have that scanner in your hands, and it'll just make life a cakewalk, hopefully.
It's a beautiful thing, man. Well, listen, John, you have a great night, safe night, and, of course, we look forward to the show tomorrow.
Thanks, Tommy.
Okay, man. Have a great one. Have a safe one. You stay right there, folks. We're coming right back. The Dow finished up 59. Nasdaq down 1. S&P's up 6. We're going to right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You had the Dow Industrials finish up 59. NASDAQ goes down 1. S&P's up 5.5. Into some of the high-volume stocks in a low-volume market. You had Hertz down $1.23 after the close out here. Icon just closed it as an 8.5% position. What's going to be interesting, HTZ, if, in fact, that position was just put on today, you know, because what you had is that intraday, Hertz went from $31 down to $27. And I just pulled up basically the filings from the last filings, and he's not on there yet. So bottom line is that it'd be interesting if, in fact, that was bought today, and he's going to basically, because an 8% position is absolutely huge in the context of what positions are out there right now. The largest position right now is Vanguard, which is owned 5.4%. BlackRock has 4.4%. They're all funds. That's the bottom line. And Icon, just the way that Icon works, is that's his own money. I mean, they are funds, but the bulk of the money that he basically takes over these companies as an activist is his own money. So he doesn't have to basically, go to anyone and say, okay, we want to do this or we want to do that. Some of the other high-volume stocks we had out here today in a low-volume market. BAC is doing a deal with the government. They're going to advertise it as a $17 billion settlement. It actually is a $10 billion cash settlement, folks. That's what it is. So it's not $17 billion. It's $10 billion cash. And the here, in fact, I'll read it for you so you can see how this shakes out, because I've read some of these other settlements, and it's like, it's not a joke, but it's close to a joke. So Bank of America settlement with the federal state authorities over its role in the sale of mortgage-backed securities. Bank of America will pay $10 billion in cash and then give consumer relief of $7 billion. The consumer relief most times come in the aspect of giving up interest, not giving up, and that's giving up interest that they already have not collected, by the way. Okay, so it's in a great accounting deal. GE was up 31 cents today, and Microsoft down 38. And the Microsoft deal is really interesting because now Obama is, bottom line, going to push the Clippers, and I suspect that those folks out there are going to be happy because he's going to wrap his head around it. He resigned from the board. And, that's the end of, he's still the largest shareholder of Microsoft, but yet he's going to concentrate on the Clippers, which is really cool. Home Depot, Home Depot went higher once again today, 252. That's a very large ABC structure on the way up. If you take a look at this on a monthly, bottom line, you get this is a beauty ABC up too. Now, what's intriguing is that if you go over to Lowe's comes out with their numbers today. The trading in Lowe's was amazing. So, number-wise, they weren't as positive as Home Depot. They lowered their sales forecast, okay? Lowe's second quarter earnings per share came in at 104. The estimate was 103. They're cutting their yearly comp sales, however. Now, what that did, they see sales up 4.5% now versus 5%. So what that equity did, it traded as low as $49.70 and then clawed its way all the way back. When you take a look at this, now, so check this out, because this is one of these deals that are like, okay, what are you going to do? Guess what? Lowe's is going to be an ABC up too. It's going to be amazing watching this one shake out. This is what you have on a weekly basis. The high is $52.08. You have to break that with over 42 million shares. We've done 32 million today, Monday, Tuesday, Wednesday. So it has 2 days to do 10 million shares, and today it did 18 million. To be a valid break of an ABC structure on the way up. So that's going to be something that you're going to want to keep your eye on. If I bring this back a little bit further, let's see where this A point is. Yeah, okay, so the A point on this is 25. Your B is 52. Yeah, so it's a 27-point A to B. 44, 54, 64, 69 bucks. That's how that's shaking out. So we'll see how that attacks it's already over the B point. The real key is going to be, is it going to have the juice, meaning the amount of volume on the weekly. It certainly looks like it's going to do it right now. On the monthly, what we have, we're at the monthly is going to be tough to do. So let's look at this versus the Home Depot. So on the monthly, it needs 167 million. We're at 82 right now. That's going to be really a tough one to do. It could do it, but that's going to be 70, maybe 150. Well, if it ever did volume like it did today, it would do it real easy. But that is unusual, meaning the amount of volume it did today. Most of the time, you're dealing with 4 or 5 million, not 18 million. If we go back to Home Depot for a second, we'll put that up on a monthly also, HD. What we have, the weekly already blew it away. We put this on a monthly. What we have on the monthly, let me find the highest month here. So the highest month, 158, 177. So you get 177 million shares, and you've done 100. Now, that can do it. So Home Depot still looks like the one, meaning a better risk versus reward. The A point on that is 28. Your B point is 81, so you get, what, 53? Gets you 122 bucks, and you're at 90.75. That's pretty amazing, actually. It's not amazing in the context of the amount of money that's being spent, that's for sure. They pay a dividend of 2.07% at that price. If you go back over to Lowe's is paying 1.76. So you can see what you have. You have a better price differential inside Home Depot, as well as a larger paying dividend. Let's go over to Verizon for a second. You talk about kicking off dividends. Verizon's still kicking off a 4.3% dividend. We are trading out. She came off the high of $54. She's at 48 right now. You put this on a monthly basis, and okay, so we put this on a monthly basis. She's not backing off. You put Verizon, I have Verizon right now back 20 years on a monthly basis, and the way that Verizon's traded, and this is pretty amazing because I'm still a bear, but the bottom line is that Home Depot wants to go higher, Verizon wants to go higher, these phone companies want to go higher. And this could also be a very large ABC up. My God. So watch the characteristic. In 1999, Verizon, $62, you're at 48. The low of those highs were 55. Right now, we're already at 48, but you can see the amount of push with volume is incredible compared to 1999 going all the way over to 2000 when it got croaked. So you're going into a supply line with dramatically higher volume. When I say dramatically higher, you're doing all of 60 to 70 million shares in 99. And per month right now, we're doing 200, 300, 500 million shares. So what that's doing, that's sucking up all that supply line. And if, in fact, it is an ABC up, conservatively, 32 would be A and 54 is your B. So you get $22, which would get you 40, 55, 65, $68. Oh, this is so weird. And 62 is the high. So the B point on this would be that 54.31, you need volume of more than 330 million. Let's go to Ma Bell and see what Ma Bell's doing. Because what is happening, no doubt, folks, is that we're in the age of telephones and lines and all of the above. They finally have figured out how to make a fortune on these things. But that's because there are computers now. Ma Bell's paying a 5.3% dividend. That's at 34. We put this on a monthly basis. She doesn't look bad, but Verizon's much stronger. So Verizon has it going. If I took the choice of those, many listeners know that I actually still own both of those. So my mother worked for Ma Bell and gave me those certificates. So I actually got the actual certificates, which is so, I should find out what they're worth. But they're Ma Bell. Verizon is in a better position than Ma Bell. That's the way that is shaken out right now. The King Dollar, when John and I were talking about King Dollar, folks, is not only moving, it's moving with a vengeance. The thing that's intriguing about the Fed minutes is this, is that there's only a couple mentions of the fact that if the employment picture gets that much better, that they may increase the interest rate faster than they expected. If you actually go back, though, and read what they've said on the employment picture and the rates, is that they've basically said that they were going to let employment run further than they even expected before they're going to raise the rates. So the bond market is still saying, guess what? Rates are not going up. You stay right there, folks. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
Tom O'Brien.
Welcome back, folks. We had the Dow finish up 59, NASDAQ down 1, S&P's up 5.5. And if you go over to McDonald's, folks, okay, they're having a tough time. Technically, the stock right now is at $94.19. That's down from $104. What's really intriguing here is this. So McDonald's had broken their swing low of March 3rd. That swing low is broken with volume, with intensity. First time it came down there, it came down to 95. That was on the daily on the 22nd of July. Then it basically blew it away on the July 31st. That's on your daily. You take a look at this on the weekly, and you'll see that you're coming into those swings with monster volume. You're talking about 41 million shares versus 30 million. So McDonald's right now is at 94. You have a high volume low at 83, and that's what it's going to go for. Okay, so what you have, it looks like a large ABC down. Your high is 103. That's your A to 92. So you get $11. And it's possible that the C point is today, which you get to 94, which gets you to 83. Okay, so there's the technical deal. Now, this always intrigues me how this happens, because it's like, okay, why are you breaking down, number one? How'd you go to a high, test the high with lighter volume, you come off that with volume? Well, fundamentally what you have is this. Well, we know that they had problems in China, because what you had there was they had the meat problem with OSI. That turned into a problem. Now they have larger problems. Well, I don't know if they're larger problems, but because of the fact of Putin and Russia and the Ukraine, you know, McDonald's has a large business in Russia. What Russia did do out there today is they shut down 4 McDonald's restaurants, and they shut them down for consumer safety, saying that they found multiple violations of sanitary rules. I suspect this is political, okay, because what they did is they shut down the largest McDonald's in Russia, okay? That was the first one. It was actually the first one, has 300 employees. Bottom line, no, actually, well, they have 300 employees in this restaurant. More than likely, this is going to be the beginning of, you know, the tit for tat of sanctions that are against Russia, you know. So technically, you have an ABC structure down, and it looks to me like fundamentally McDonald's also has an ABC structure on the way down. If we bring this back on a little longer term basis, because at 83, you know, you're going to have an equity that is off 20%, and you bring this back longer, McDonald's can go to 64. That's going to be quite a ride. $64 off 110. And McDonald's, now you picture this, that's where if you are running, coming into an equity just for the dividend, you know, better hold on, because McDonald's is paying a dividend of 3.4%, but if in fact you just took a ride from 100 down to 64, or even, you know, that would be quite a ride. United Technologies, UTX, another large cap out there, that is up $1.15 today, 4 million shares. That 4 million, you're just coming into ICE, folks. We hit 109.71. ICE is basically 114. The bottom of ICE is 109.11. That was coming in 4.4 million to 10 million shares out here today. And it looks to me like this is a very large ABC down. It'd be great if this thing could trade a little bit higher. You know, to get to 112 would be the number. 3M. We go take a look at 3M, and these particular ones here. 3M was up $1.20 today, and this little baby had a little juice into it. So that is not ready to basically shot yet. I expect it's going to be. Why? Because it came off that as high as a 146, went straight down to 138, has volume. What you did have today, you got a small expansion of volume. If you get a small expansion of volume, okay, the bottom line, you wants to go test that high. And one of our tigers in the den, Mark from Maine, he says, I've spent time in Russia 25 years ago, and the highest quality meat was at McDonald's, which totally makes sense. I mean, because the bottom line is at least you know what you're getting. So bottom line is that is going to be, you know, I suspect what you're gonna have, no doubt, is that there's going to be more companies that are American companies that are going to get nailed over there. So just picture it. I mean, Putin took over the largest, you know, oil company. I mean, forget it. I mean, you know, anyway, there's larger problems for these large internationals doing business. One of the largest ones. This is where this is going to get interesting, and this is where our own Congress has been quiet. And what it is the amount of oil companies that are doing business with Russia, in Russia, and all of the above. You don't hear a peep. ExxonMobil. ExxonMobil is absolutely huge, huge. Okay, you know, we'll see where that shakes out. If you saw that article in the Wall Street Journal a couple days ago, what you had is that you had what was the guy's name? Actually, one second. Let me see if I can pull this article. I know what it was. John Mack. John Mack from Morgan Stanley. The article in the Wall Street Journal was about that, how they put together the largest oil company in the world, basically for Putin. And Putin actually put him on the board, you know. So you're going to see that the banking structure, the oil structure, there's different forces that are at play that no doubt are going to affect where the screws get turned over there, you know. Now, my take on it is that Putin is not going to stop, which is going to rile the rest of Europe. And piece by piece, you just start getting into it, meaning that he starts pushing more and more and more. Why? Because he can. That's what it comes down to. So the energy market itself, if we look at oil, this is really cool, folks. The gasoline market, I'll pull up gasoline for a second for you. And gasoline, right now, wholesale gasoline is at $2.71. That's unleaded. The way this is set up is that we're at $2.71 wholesale. You already broke the $2.72 mark. So that sets up a $2.50 wholesale gas. Now, what would be really cool is that would mean that at the pump, we would see gas under $3. Right now, in Pinellas County in Florida, you can, 310. 310's the number. You know, so of course, different places, you know, fluctuate. Bottom line, though, that's the quickest I've seen gasoline prices come down, meaning in the last, 3 to 7 weeks. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Don't forget, folks, tonight, you will stay right here from 6 to 7 Eastern Standard Time. Allie, Ford, myself, we got a great show, Mindful Living. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want, life, folks. Visualize it, step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here, another hour.